Good morning, everybody. Can you guys hear me? See me, hear me? Good morning, Trade Nicks. Good morning, everybody. Get my screen pulled up here. For everybody on Instagram, I am sharing my screens on YouTube. So if you'd like to see that, I recommend hopping over to the YouTube live stream. Good morning, everybody. There's not been a whole lot of change since yesterday, so it's going to be a lot of the same stuff right now, but we'll go through it, talk through it, share what my plan is, and into the live trading session this morning. Yeah, interesting price action, interesting location. It's a little tricky. I'll get into it. I'll get into what I'm watching and what I think of the current environment. So we'll get into it in just a minute. I'll give people just a minute to join. All right, can everybody see my screen on YouTube? I'm sharing my Thinkorswim charts here. Just want to make sure that it's actually going through. All right, cool. Because yesterday midstream, it kind of dropped out of sharing my screen for some reason. So if there's any issues with screen share audio, please just let me know in the comments so I can fix it. I appreciate you guys. Does anybody have any questions before I get into it? Go over anything. Monday is usually I spend a bit more time going through analysis, and then if there's not that much change going from day to day, I don't go through quite as much, but I still will go through everything. Overnight pump and dump was interesting. Day before CPI, yeah. So yesterday we had a consolidation day, and typically the first thing that I look for going into today would be a fake out on a break above or below that. And unfortunately, that already played out both ways, like last night. So that setup is out kind of, and it kind of leaves us in a little bit of a tough spot. Good morning, Richard. Good morning, everybody. Thanks for joining in. Am I trading Carmine's supply and demand or something else? I learned a lot from trading in InvestiTrade, and so a lot of my core strategy is there, and also some other things that I've learned. But I would say I trade my own system, and that includes supply and demand, support and resistance, basic technical analysis, and then the big key thing is reading the order flow. And I do that a lot of the same way Carmine does. We have a lot of the same trades, but then I also do some things different and have a lot of my own different setups and different ways I trade. But you can all see the same information and have different things, and that's great about trading. There's a million different ways to make money. So with that being said, just going into this morning, same thing that I said yesterday, I don't recommend copying my trades. The reason I'm doing this is just to help you guys learn and kind of walk with me through trading days, doing analysis, seeing the live trades and executions. There's always a delay in information sharing. So even if you tried your best to copy my trades, your risk reward is not going to be the same. Your end result is not going to be the same. I still have red days. I still have red weeks. So I don't recommend people just being here to try to copy my trades. Just want to put that out. That's not the purpose of what I'm doing. And this is all my own opinion. Don't just listen to my opinion and take it as financial advice for you to go and take trades on. I'm just sharing what I'm doing so you can possibly learn or possibly just be entertained by seeing how I do things. So with that being said, I'll start getting into my analysis for the day of what I'm looking for and how I'm looking to approach the market. So the first thing I'm going to talk about is just a few pieces of kind of like fundamentals and market context. So right now, we're in this higher time frame channel that we can see on a weekly chart. We've been kind of consolidating in here from a technical perspective. We're kind of in a channel consolidation, but moving higher. But the big thing as far as fundamentals, we have news coming out in the next 2 days. We have CPI and PPI news, which are higher impact news events. We also have US and China meeting in London right now to discuss tariffs, and that's probably the single greatest impact thing on the market right now this year so far. The theme has been heavily around what's going on with tariffs. Last year, a lot of it was semiconductors and AI stuff. This year, that is still in effect, but definitely we've seen the most volatility and price swings come in around news related to tariffs. So that meeting and potential outcomes from that meeting today are very important. So we could see very sudden erratic price action based on whatever news comes out of that US and China news for that meeting in London. So we have those three things: upcoming news, markets kind of pending, hearing what comes out of the US and China negotiations. And three, we have Trump scheduled to speak today at 4 p.m. So at the market close. So three or four kind of key fundamental things that the market could be waiting on to make a move. And on top of that, from a technical perspective, we're in the channel, we're consolidating at the highs of the channel. Yesterday, we had a pretty tight consolidation day. We faked out the high and low of that overnight, and now we're back in the middle of the consolidation. So why do I say all that? Because it's important to just be aware of where you are in the market and what are the driving factors and what's going on. So with that being said, I find it hard to see a clear direction, clear setup today. So I need to be cautious. We're in a place where we're kind of in the middle, waiting for information to come out. And so I'm also in a place where I kind of need more information from the market. So that doesn't mean I'm not trading. That just means I'm potentially open to just staying cash today and seeing what develops. It's important not to force any setups. So I will be around to see if there's any clear opportunity that comes out. But that being said, I'm not going to force any trades, and I'm being cautious and aware of the fact that we're in the middle of a range. We're pending some upcoming news and some upcoming fundamental factors. So it's just important to be aware of that. It's equally important to take good trades. It's equally important to be aware of when capital preservation is important, when there's not a clear and key opportunity presenting itself. So with all that being said, we'll dive into the technical analysis aspect. So again, for the few of you guys that are on Instagram, if you want to see my charts, I'm on YouTube. The link is in my bio on Instagram. I also posted it in my story, the link directly to the live stream on YouTube. So looking at the weekly chart here, we can clearly see the channel that I've been talking about, where I have marked it with this lower and upper trend line here. We're consolidating right here at the top of it. And again, we've been on this uptrend, but we're also kind of sandwiched between, you could call this an area of supply up here, where we were at prior all-time highs, consolidated, and then sold off. You can see pretty much all of this wicks and red candles before we broke down. So consolidate and break down. So this would be like an area of supply to watch out for, but we've been uptrending. And now we're at the top of that channel, right at the bottom of this zone. And so clearly we're in a place where the market is kind of sandwiched between a rock and a hard place. And then on top of that, we have those fundamental factors. So it's important to be aware of that, just where we are in the market. But that being said, we've been on this uptrend. Every dip has been bought and made a higher low. So I'm not looking to be a first seller to go against that. I'm going to continue being aware of that trend on a higher time frame. So dropping down to the daily chart here, this is what I was talking about. We're continue to make higher lows within this channel. And every time we peak the top of this channel, it gets rejected back down, but we are still continuing to make higher lows, higher lows, higher lows. Yesterday, we had a pretty flat day. You can see clearly, just look at this day compared to most other days. We had a very flat day with an upper wick and a lower wick. And then overnight, we had a false break above this channel trend line here, and then rejected back down with pretty strong selling that dropped all the way back under 6,000. However, as soon as we broke below prior day lows, we bounced back and held right there in the middle. So just looking at the weekly time frame, you see where we're at. You look at the daily time frame, and that makes sense. Now, typically after we start consolidating, one of the first setups that I look for is a fake out above or below, the prior day's consolidation. And both of those setups happened overnight. Now would have been great setups if I didn't sleep and traded overnight, but that's not what I do. Yeah, makes sense. Dropping down to the 6-hour time frame here. Let me change my view a little bit here. See this consolidation range that we're in here, and can start to see this more clearly what happened. So after the market opened last night, futures are closed from 5 to 6. So after we opened at 6, 7 p.m. here, the start of the 6-hour candle, we broke above this range, closed below it, and then retested it and broke down aggressively. So it's typically a bearish sign if you break above a key consolidation area, channel, etc., and then recapture back below it in it. That being said, we also hit these lows, took liquidity, and bounced right back to the middle. So there's even dropping down to the lower and lower time frames, there's even more and more kind of mixed signals, I would say, or at least clear indications that the market is kind of sandwiched in a tight range between resistance and support. So dropping down to the 4-hour time frame here, pretty similar picture. You can see pretty clearly. Again, we've been making higher lows, narrowing into that channel. We briefly wicked above it and rejected, and now we're literally dead flat right in the middle. I think on my intraday trading charts where I have more key levels marked, the 50% of that is around 60-15, 60-16. So that's an important area to watch. If we hold above that initially, we could go for a retest of this / break out of it. If we drop below it and hold below it, we could go back for a break under these, I would say almost a double bottom here and here on the 4-hour chart. And if we break under there, we could go back and test these buyers from the pre-market on Friday into this key level around 59.72. But clearly the trend is up. Like I said yesterday, very similar game plan to yesterday. As long as we hold really above this 59.70s key level and we continue to make higher lows, I'm going to be looking for buyers to support. I'm going to be looking for buyers to support these lows and target the highs. I don't really like initiating shorts at the highs in these conditions because we've been uptrending, and I don't really like longing these highs for a breakout because every time we've peaked above, we have been rejecting back into this channel. All right. I'll pause there to see if you guys have any questions before I drop down to more intraday trading timeframes. Couple questions so far. How many years ago did you start trading? I've been day trading intraday for around 4 years, and I was swing trading kind of more fundamentals and longer time frame, almost investing for several years before that, just stocks and options. You clear and redraw every morning. Yes, I explained this yesterday, and if you missed yesterday, I recommend going back and rewatching the live stream from yesterday. I went over a lot of kind of like a mini lesson on how I do some analysis and how I read things in order flow. So even though we kind of just took a break-even trade yesterday and walked away, I think there was still some good stuff in there as far as lessons. If you're interested in learning about how I do technical analysis and how I read order flow. All right. No, I don't only look for anything. I'm just putting together analysis. Obviously, when the trend is up, the best quality setups are going to be to buy the dips. When the trend is down, the best quality setups are going to be to sell the pops. But that's not all. I'll many times take counter trend scalps because I'm a very short-term intraday trader. I don't need to always go with the trend because I capitalize on different short-term moves by reading order flow. But the best setups are going with higher time frame analysis, and I don't think that's debatable. All right, continuing on here, we'll drop down. So this is where we can really see a clear picture of what happened last night. We had this large pump. I don't know if this was some news. I saw a few headlines. I didn't see anything specific that drove this necessarily, but it doesn't really matter. You can see it in price action, what happened. We tried to break out above this channel. This is the high of that higher time frame channel. Pardon me. Throat's a bit dry. So we tried to break out above this higher time frame channel here. Above this channel at this time was right around 60.32. We got about 8-9 points above it, up to 60.40. Rejected back under it, and clearly you can see once we rejected back under that channel and retested it here at this wick, things kind of came off the rails pretty fast. So we dropped all the way from 60.30s all the way down to, you know, break under 6,000 into the 59.90s relatively quick in just a couple hours. So to put that in perspective, I mean, we had a 50-point drop there from making those highs to these lows, and we traded in like a 28-point range all day yesterday. So all day during regular trading hours yesterday, we traded in like a 28-point range. We peaked this high and sold off 50 points in just a couple hours overnight. So pretty volatile sell-off. But that being said, as soon as we dipped under these lows, which I would say are not really key lows, like looking at the 4-hour, the 6-hour, and the daily, we can see how we're making higher lows, higher lows, higher lows, and uptrending. These are not one of those key higher lows that I would say. So the fact that we dipped under these kind of shorter term lows, swept out some liquidity, and then buyers immediately stepped back in and bounced back to the middle of the range. Pretty typical of a balanced market. So, you know, I wouldn't say selling is overwhelmingly strong here, that it kind of reversed the trend. You know what I'm saying? So we're still kind of holding in the same structure. And clearly you can see this demand area off this news from Friday. Was this Friday? Yeah, I think this is Friday. Yeah. Right above this key level at 59.72 that we had noticed from the order flow in days prior, shot above there, and we're still holding higher lows. So number one, if I see a lot of buying absorption and demand holding above around 60.15 plus or minus a few points, then I may look to scalp that long, just targeting a short squeeze of these overnight sellers back into this channel. And I would use the top of this channel as a target. Or if buyers do not hold above the 50% of this range, we kind of break and hold below it. I don't know if I would short it, but watch out for a drop back under some of these overnight lows, prior day lows, probably around 59.96, 59.92, and 59.85. So if I see a nice strong drop under there, that's turns out to be a fake out, and I see lots of strong absorption and aggressive buying start to step in, as long as we hold above these 59.70s, then I may be looking to take that long. And again, I probably am not going to be targeting such a large move as to look for a breakout of these highs, but just look for a bounce back towards the middle of this range, say around 6,000. Yeah, it could be around 59.96 to 6,000. And then if we break above that pretty strongly, then we could look for the 60.15 key level. If we break above that pretty strongly after dropping and recovering, then we could target, regular trading highs from yesterday around 60.28. And if things are really strong today, it could go for, another test of breaking out of this channel trend line that I've mentioned. All right. Yeah, appreciate that, Clayton. Helps a lot if you guys hit the like. It helps the algorithm reach more people so we can have more people joining in on these lives. Appreciate that. Appreciate that. So the last there's a few pieces of uncertainty, like I said, with those potential news headlines coming out. There's also a lot of civil unrest going on in the U.S. right now. We also have, stuff going on, potentially retaliatory strikes from Russia and Ukraine. So we're kind of in a bit of a period of uncertainty where some things could pop off. China and Russia could use the civil unrest in the U.S. right now just as an opportunity while kind of the world can be distracted to take some other actions in Ukraine and other things like that. So I definitely think we're at a point where we're balanced in the middle right here. It can go either way. And also the market is kind of pending some uncertainty around news, around geopolitical events, and around trade negotiations. So it's very important to, in my opinion, kind of wait and see what develops right now and just go with what develops. Don't try to fight it. And that being said, if any of the technical analysis that I just described and the setups that I'm looking for occurs, but say we drop down here above this demand, but some news came out that's driving it, and the market is just blasting down here with strong selling, then that's probably not a bottom reversal that I'm going to look to catch. Like if you see price dropping into a key demand area and it should be bouncing and it's just selling with a ton of selling because of some news that you may or may not understand, then it's best to not try to fight that. Just step away and see what develops. All right, guys, I'm going to drop the Instagram live stream. If you'd like to stay on with the live stream, I recommend joining on YouTube. The link is in my bio. It's also in my story on Instagram. So if you'd like to come over and stick around for the live trading session, I'll stay on here on YouTube, and I will share the recap as well on YouTube if you're not able to make the live stream. So appreciate you guys joining on Instagram. I recommend to stay in the live stream, hop over to YouTube. Link is in my bio, link is in my story. See you guys. All right. See that I have minimal lines on my chart. Yeah, I very much have only key things on my chart. And again, I go through a blank drawing set every day and go through my analysis, fresh analysis every day, because I'm a short-term trader and I'm looking to go in the moment with the flows of the market, and not I'm not looking to take positions based just on chart levels, supply and demand, et cetera. I'm very much looking to just execute based on order flow, and I really only use the charts to come up with key areas to look around. What's a good key level to you? Interesting activity that I see on the tape. I'll mark a key level around like very large order size, kind of algorithmic activity, buy and sell, or from a technical analysis perspective, just support and resistance levels, supply and demand levels, open, high, low, and close levels, all of that. Not pretty basic stuff, but it's how I use it and read order flow around it. I often look for false breaks above or below key levels. I look for unobvious things using order flow that you're not necessarily going to clearly see on a candle chart. All right. Couple minutes here till the market opens. Again, going to be patient this morning. Kind of at a place where we need more information from the market. We're right in the middle of a higher time frame, and we are pending some geopolitical and economic news in the next day, today, tomorrow, and the next day. All right, any other little questions before we start locking in? Yeah, I'll drop this down to the 15-minute here, take a look really quick. And then I'll switch this over so we can watch Bookmap together during the trading session and kind of see the order flow as it develops. This was a pretty key level yesterday, and it looks like it continues to be a key level. I don't know if I'm in the market, but just around here, you can see where we closed yesterday. I do have 60.15 marked. Let me pull up my levels. Yeah, I'll just leave it at 60.15. But it's not a hard exact level. It's just keep in mind where we're at. That's around the middle of the range where we've swept the highs, swept the lows. And so you'd like to see one side get momentum above or below that. Logan, you're on a losing streak of 16 trades. Any advice to keep my head straight? That is quite a losing streak. I've been there. I would say try to figure out what you're doing. Are you taking good trades and the dice are just rolling against you and you're taking losses, or are you making mistakes? Do you actually have a system and defined setups, or are you just taking random trades? It's hard to know because I don't know where you're at, but I would say, one, if you have a defined system and you know the exact trades you look for, are they valid, like in terms of market conditions and location that you're looking for them? Are you taking good trades and just taking a loss? That's just part of the game. Or are you making mistakes? Either way, I would try to reduce your trade frequency and try to really zero in on your most A+ setups. Size down, reduce your frequency, really focus on those A+ setups, take it and walk away. Sometimes just a small base hit just to turn the tide back in your favor is all you need to get out of a funk and get the tides going back in your favor again. The important thing is keeping your losses small, keeping your wins big, so you can afford to be wrong as often as possible and still turn out profitable because your wins are so much larger than your losses. Risk reward is the key to this game. Risk management and risk reward. Yes, it's important to have a good system with a reasonable win rate, but it's much easier to overcome win rate issues with just taking good setups and holding big wins. Yeah, read and learn always. My favorite trading books are The Daily Trading Coach, right here on my desk, and a few others. The Daily Trading Coach, The Mental Game of Trading is really good. Best Loser Wins is pretty good, and those are probably my favorites. And then there's the classics like Market Wizards is really good. It's funny listening to like Market Wizards and stuff that's older and just seeing how it's like it's the same shit. It's still the same shit. The market goes through different cycles and it behaves differently. Like obviously there's a lot more electronic trading now, digital trading algorithms and stuff that heavily influence and manipulate the markets, but it's the same stuff. So a lot of buying here right off the rip. Let me switch my screen over now. Yeah, there's always a delay. And there's always a delay in me like processing when I'm taking a trade and communicating it to you guys. And then there's the technical delay of the stream. So don't get on here thinking that you're just gonna copy trades, because there's always a delay. What the heck? There we go. So you can see right off the bell here, there's a good bit of buying failed so far right here. It ticked just over this pre-market high here at 2150, 22. So just a couple ticks over that pre-market high with a good bit of buying, and failed. So again, keep in mind, we are like consolidating tighter and tighter right in the middle of this range. So let's just stay patient. It's certainly okay to just be cash today and let things develop. Just given, like, without seeing any price action, anything, like, we'll watch it and we'll see what develops. We'll see if good opportunity comes. But just looking at higher time frame charts, looking at lower time frame charts, you can just see where we're at in the market, plus the fundamental factors. It's a good day to practice patience and discipline. So the main levels that I'm looking at really is just the middle of this balance range where we're consolidating right now around 60.15. And then we have the highs up here around the 60.35 to 60.40s. So that's the high of that weekly channel and the overnight highs. And then we have the lows around 59.92. You can watch that. And if we get a little dip under the 60.15 area, we had a bit of consolidation and bounce right at 6,000. And obviously 6,000 continues to be a key spot in the market. Key whole number, just usually when you see just a whole big number like that, it's just a mental number that a lot of people place orders around. Bulls would probably like to see it hold above that, and it's been pretty fiercely defended, because any little dips under 6,000 the past couple days has been quickly bought. Do I have a way? Mike asked, do I have a way to evaluate if volume is high or low within the first 15 minutes of the open? Yeah, I mean, it's all relative, right? Just depending on what's been occurring. But literally, just look at Thinkorswim and you can see right at the bottom of the chart, just pull up a 15-minute chart, and then you can see right at the bottom under each time frame candle, and look at the last couple days. I don't have a quick, like, objective indicator that just tells me yes or no. It's kind of just a feel. It's a feel combined with, I can clearly see just the volume that's coming in. And even if there is high volume, if it's very balanced and I can see, like, okay, the last few mornings I've seen price move up and down in, 20, 30 point ranges in the first 30 minutes. And all of a sudden, like yesterday morning, the first 30 minutes pretty much was in a 10-point range, and then barely over a 20-point range in the whole day. So like I can just feel when I saw yesterday after we basically I longed to the low of the day yesterday at 6,003, and I just barely got wicked out before it went. So the plan yesterday was perfect. The level was perfect. Unfortunately, I just got wicked out on one quick little drop before the target hit. But after seeing that, and after seeing the first hour when you should see the most volume and volatility, I saw it was lower than most of the previous days. And really, we took out those highs, but until we pretty much chopped in a pretty tight range all the way until the afternoon. And then there was a little bit of a pump in the afternoon, and then it sold right back down. So just the feel that I had in the first 30, 45 minutes yesterday was immediately enough to tell me, like, today ain't the day. Just take the break even and walk away. Sometimes, like, the temptation is you want to make money every day, you want to put trades on every day, you want to catch every move, but reality is you got to pick and choose your places where there is the best opportunity, and sometimes it's just not worth putting on risk, physical capital risk, and also the mental risk of being involved with the markets when it's choppy and in a tight range, and that can lead you to make poor decisions in subsequent days because you're mentally drained, and it's just not worth it. It's just better to just go enjoy your time and save your capital, save your risk, save your mental capital for when opportunity is good. Looks like a seller is kind of defending these highs here. Just looking at the order flow, it's almost like a mini head and shoulders this morning. Since 9:30, we had this pump here, so you can kind of see head and shoulders here. But you can see where all this buying was here. A lot of buying here, a lot of buying here, and now popping into here, seeing some selling. So we could look at this as passive seller absorbing these aggressive buyers, passive seller absorbing these aggressive buyers. Now coming up here, aggressive buyers are now weaker and selling is starting to come in. But just given the overall context of it's like the first couple minutes into the market being open and we're right in the middle of the range, I'm not looking to trade anything on this. We're right in the middle of the range. Just observing. But again, you could kind of say that same thing both ways, because we had this aggressive buying, we dropped down here to VWAP, and this kind of got absorbed and bounced right back up. So just very 50-50, nothing key here. Thank you guys. Appreciate it. Do you have any video where you talk about trading while having a 9-to-5? No, I don't. I am in the process of making and working on making more longer format videos for YouTube and stuff. So I will come out and talk about more things. But the great thing about the futures market is that it trades 24 hours. So for years, I had a remote tech job, and I spent a lot of time in the charts and stuff between like 4 a.m. and 9 a.m. before I focused on work stuff. And then I was able to have multiple monitors, so I could just kind of monitor things in the background while I'm actually working on my day job. But yeah, if the great thing about futures is that you can trade different sessions. It's like 23 hours a day, and so you can find a time frame that works for you and just really focus on setups that for that specific time frame. Sebastian, Matt, do you consider P and B shapes on the footprint at key pivots in the overnight relevant? Yeah, I still do. But it depends on the overall context. Yesterday we consolidated, and then overnight, this is kind of the inverse of what you would normally see happen, right? No, let me go back. Frequently, when the overnight consolidates in a range, you will often see during the regular trading hours fake out break above that, grab liquidity, and then drop below that, grab liquidity. And we had the kind of the inverse, which is, in my opinion, less common to see, where yesterday during the regular trading hours, New York trading session, we had more of a consolidation, and then overnight, I'm assuming it's probably news driven, we swept above, broke out above, failed, dropped below, broke out below, failed, bounced back to the middle. And so here we are. And really, we had a really nice solid rally in the pre-market off news, and then into the first like 30 minutes on Friday. And since then we rejected, and we've just been consolidated and then bounced. We ended up closing near the high, but it's been an up and down consolidation. And then, yesterday was yesterday was a total inside day to Friday. And then we only just briefly broke out above that overnight, and we're still right in the middle of this range. So we're really right in the middle of the same price range we've been trading since Friday. And even Thursday was in there too. We're right at the highs of Thursday, but it's been up and down, up and down, up and down. Maybe some paper trading today, Robert says. No, I don't paper trade ever at all. And if it's a day like this where it's very consolidation, and I think it's better to practice the discipline of staying in your live account and taking no trades versus building bad habits of jumping on a paper trading account and just over trading and blasting trades all over the place. It's just a bad mental place to put yourself in. And I don't care what anyone says, that will carry over to your regular trading. So the best move if you're developing is, in my opinion, stay on your regular live account and practice the patience and discipline of just doing nothing when it's not at a key opportunity point. I also always have First Squawk pulled up on X, formerly Twitter. It's a good news source to kind of aggregate news things that come in. So keeping an eye on that to see if anything gets posted about the outcome of the US-China trade talks in London. Kind of a large order just hit there, right around that 60-15, 60-16, that 50% key area. 399. Looking on the footprint chart, looks like a 399 lot order right here. Hit, what does it say? 420 right here. So we'll see what happens here. And now, 400 plus positive lot order up here. So it's a battle here for this 50% point. Do kind of like that failed break and pop here, right at that 60-15 level. That's kind of what I was talking about, wanting to see if I see a good absorption and pop off the 60-15 level, to see if it gets defended and supported and rally back up to 60-30, 60-33 area. But best case scenario for that setup, we're getting in right around here. So yeah, I mean, 10, 12 point potential profit and risking maybe 2 or 3 points. So valid setup here. The only thing, and I'm not going to trade it, I just don't like this volatility here. If you just looking at the footprint chart here, ignore the candle chart. Just looking at the footprint chart here, it's so flat. We've basically traded the first 15 minutes now in like a 5-point range, 5-6 point range, from like 23 to like 16. So 16, 17. So yeah, like maybe 6 or 7 point range here in the first 15 minutes. Not ideal. Not ideal to try to catch a breakout or a momentum trade like that when we're just going straight sideways in the first 15 minutes of the New York open session. What add-ons do I have on Bookmap? Really the only things that I'm using is, it's pretty standard. You can see I adjusted my color scheme settings up here. You can see how I have that adjusted. I'm using the TM Lite add-on, which you can see if I look at the regular ES chart, there's a lot more noise and bracket orders, like orders. The TM Lite add-on just removes a lot of those those false bracket orders. It's not too bad right now because volatility is pretty dead, but you can see it if I zoom out here, see all this just nonsense here, just kind of spoofed bracket orders and down. It has kind of stopped, and volatility is pretty dead here. So it's crucial right now to use this. And then the other thing that I use is, there's my settings, by the way. The other thing that I use is, and I don't really use it, is this multi-book add-on. That's this here at the bottom, and it just kind of lets me quickly see the cumulative selling versus buying on the day. I don't really use that. I just kind of have it up. I don't know why. I don't really ever look at that, to be honest. And then the absorption indicator. This is nothing you can't see without it. This is what you see, these numbers popping up. And that's just like if really fast orders trade within a certain time period. Can you guys see that pop up? No, you can't. It's not showing it on the stream, I don't think. My settings pop up. It's only showing the app. But it's the absorption indicator, and I just have it set in automatic mode, and I adjust the SD multiplier depending on how volatile price action is and the average order size. But it's nothing key. I don't ever take trades on that. The only reason I have it up is just bring my attention when there's like a specific level that a lot of orders are hitting around, which we can kind of see right here. You can kind of see like a lot of orders hitting around here, a lot of orders hitting around here. So this whole level, which is like just under VWAP here, just brings my attention a little bit more to that when there's a lot of absorption fast orders hitting around there. I have the Global Plus subscription on Bookmap because it includes all these add-ons that I use. And then the big key thing is the DOM Pro that it includes. I use the DOM Pro a lot. Which just gives me a total, it's pretty much all the same information as like that I see on the footprint, but it's just for the whole daily range. See the volume profile delta, the session volume profile, the bid and the ask, and everything on that on the DOM Pro. Do I execute off Bookmap? No, I execute off of my footprint chart, which is Sierra chart. I'm gonna make a video going over my whole setup, but just to tell you guys, since we're on here talking, I have Sierra chart, or sorry, I have Thinkorswim for my candles charts that I use for technical analysis. And then for order flow analysis, I use footprint charts on Sierra chart, and I use Bookmap, which includes the heat map and the DOM Pro. You could use a DOM on anything, but I like all the information, and it's a really good DOM, the Bookmap DOM Pro. We are still just messing around in this range, guys. Similar to yesterday, but honestly, even worse. Yeah, yesterday we had a nice drop off the open where I got longs off the bounce off 6,000. And I was like, okay, we got a nice drop, nice bounce. We had some good volatility, and then it just went super sideways. And then I just called it a day early. And then this morning, we had quite a bit of volatility overnight up and down, and now we're just going straight sideways right in the middle of the range. So yeah, when I click on my settings, it show you guys because it's sharing, like I have it clicked right now, right here, but you can't see it because it's sharing my Bookmap application, not like my whole screen. Yeah, what determines if I come back? I probably will just come back another day, but if there's some news pending or something, then maybe I'll set alerts near like the upper third and the lower third of the range. And if I'm not interested in trading in that range at all, I just want to wait and see what happens after price action gets out of that range, then I'll set alerts on Thinkorswim. And I have the Thinkorswim app on my phone, so go do something else, do whatever, and I'll get alerts triggered on my phone. And I'll just quickly step back in my office and sit down at my screens if I want to watch and see that. But that would maybe only be maybe between like 2 and 4 p.m. if we're setting up for a little afternoon move. So having some nice bit of buying here. We're kind of peaking above this range we've been in so far today. Let's see what happens. But you know, if I was in longs, I would literally only be targeting like 60-30 to 60-33-34 area. So it makes zero sense for me to look to long this, and they're getting this nice pump here, because my stop loss that would make sense would be down here at like 60-15. So I'd have like an 8-point stop loss for like an 8-point target. There's no risk reward there for a high quality setup. Do I consider current order book while managing trades? Does it matter to you? What matters to me while I'm managing trades, I try to be as hands-off as possible and just accept the risk and just look for my target. The one thing that I will do is when I see a sufficient amount of orders come in, like yesterday, we saw a lot of buying coming in, and that shifted market structure in my direction. I said, okay, let me trail my stop loss to break even now, because more often than not, if I see a lot of buying or selling that moves price in my direction, price structure shifts in my direction. If that fails and traps those participants, more often than not, we're going to sweep back lower below where my stop loss would be. So once I see a market structure shift in my direction, like if we were making lower lows, bottomed, I got a reversal, now we're making higher highs, price is 5-6 plus points in my direction, I'm seeing a lot of buying, I will then trail my stop loss to break even. And that also is like at a point where if I was risking 2 points on the trade and I'm up like 6 points now, that's already like a 3R multiple. I don't want to hold that into the red. But it very much depends also on conditions and volatility and like what the normal price range movement is. The the higher volatility goes and the higher price swings go, the more I'll reduce size and widen my risk, so I have a better margin of error that's appropriate for the price range and volatility that's current in the market. So speaking of volume, it's been almost the first 30 minutes now, and I will take a look at volume candle at the bottom of the chart, the first 30 minutes over the last few days. We still have a few more minutes, so we'll see how this develops. But right now, it looks like volume is even a little bit lower than yesterday, which was already a good bit lower than most previous days we've seen in the last 10 days. So pretty low volume, pretty unexciting. So we had a good bit of volume on this pop here above this high. You can see it got absorbed and dropping back down. I wish I could give you guys a more exciting market to watch with this live stream, but it is what it is. It's important not to try to force opportunity. We're not trying to make opportunity for ourselves. We're just observing, and when the market presents a good opportunity, good confirmations, good location, good volatility, etc., then we just put on risk and manage it. But when there's not that, and we can clearly identify that it's not there, it's very important not to try to force things that we want to see happen but are just not clearly in the cards right now. Do I use the standard settings on the absorption add-on? Yes. I don't know what the standards are, but I use the automatic setting. If you see there's an automatic mode button, I do that. And the SD interval, the standard deviation interval is 30. So the last 30 minutes, and the multiplier right now I have set at 10. And I will adjust that up and down based on volume and volatility in the market. If I'm seeing that orders are triggering that at all over the place at not key levels and not key areas, I will increase that, if that makes sense. So it triggers less frequently and only around really large orders that are an anomaly, basically. Again, you don't need that. You can clearly see when large orders hit, but it is nice because it just kind of brings my attention to unusual activity that occurs around specific levels, especially if I see it a couple times around a specific area. So what's everybody else watching? I'm curious to hear from you guys. Are you guys all watching the S&P? Let's take a look at NASDAQ. I don't often look at NQ, but since we're just kind of screwing around here in the middle, and yeah, NASDAQ looks pretty much the same. NQ futures, screwing around, just chopping up and down in the middle of this range. Anything else you guys watching on your radar? Isha watching NQ longs. I know he trades NQ. Waiting for TGAT and PEP to come back down to previous support, get in shares. Yeah, I rarely trade anything else. Like I have long-term investment accounts that are just in basically index funds. But I do have some larger accounts that are pretty much just cash and high interest. And if I see really good opportunities on some key names, like maybe primarily either SPY or Tesla or NVIDIA, something like that, then I'll typically just swing trade options with it. And I just like, for swing trades, I like the options, even though you have to deal with theta or price decay over time. But I like those better. Just I can cap my max risk with my position size. Even like I don't want that to necessarily be my max risk, and maybe I would close that before it. It's just a safety net. Makes me sweat thinking about holding futures for swing trades, just because something crazy can always happen and you can be up or down a lot. The ORB, is that, what is that? The opening range something? Opening range break? Opening range breakout? Is that what that is? Opening range breakout. That's not like a specific setup of mine, but like I do watch the opening range, especially like first 30 minutes and first hour. If we have good volatility and we like consolidate and form like a base and rally structure or a base and drop structure out of that, then yeah, I will look for that as a support or a demand area if we retest it. So I guess, yeah, but I don't have that as like a name setup that I look for. But I do watch the opening range, first 30 minutes, first hour, and see how that develops. If we trend in that first 30 minutes, an hour, if we consolidate and then bounce out of it, and then if it holds on a retest, yeah, I do watch that. Anybody have any questions, trading or otherwise? We are in a pretty dead spot right now. Just let me know. We're just hanging out here together, watching this paint dry. Did I go running today? Yes, I did before the stream. Just a couple miles, light run. Thank you so much for the live stream. You're welcome. Hey, I hope it helps you guys. If anything today, hopefully avoid bad trades. Avoid giving up capital for no reason. Thanks for sharing your knowledge in Carmine's group. I have learned a shit ton from just reading your thoughts. Awesome. I'm glad that's super helpful. Did I learn from Carmine? Are you part of the Investor Trade course? Yeah, I learned a significant amount from Carmine and Dylan in the Investor Trade course, Investor Trade Academy. I've also done some other things and learned on my own a significant amount, but I attribute and give them credit there all the time because definitely probably one of the realest groups on the internet around trading, real knowledge, great education and group to be a part of. And yeah, my trading style is extremely similar to Carmine's, and I learned to trade a significant amount from him. And so extremely similar, although I do have my own way of doing things, my own setups that I look for, and a significant amount of the time that matches up with what Carmine's doing, but not always. Who do I think should join the academy? I mean, anyone that's serious about wanting to learn trading, especially if you like the combination of analysis, market structure analysis that Dylan shares, and you're interested in order flow. There's not so much on the internet. It's funny because it's kind of a buzzword now, but I've been doing this for years, like 3-4 years, looking at order flow and analyzing order flow. And the big reason for that, being early in on that, was learning from Carmine in Invest Trade. And it's funny because it's kind of catching now, like a lot of people. But I will say a lot of the stuff I see online about order flow and stuff just kind of makes me giggle, because I'm like, You have no idea what you're talking about. You're just using a buzzword. Yeah, a lot of gurus using it now, not a lot of real traders. And I'm not trying to be a hater. Like, look, I'm just doing my own thing. I'm not here to hate on anybody. There's a lot of good stuff out there. There's a lot of ways to make money. I don't think I'm better than anyone. I don't think anyone has the perfect system. But that being said, I think at this point, we are all aware that there's a lot of fake nonsense out there, and order flow has become kind of a bit of a buzzword in the trading space online right now. And I see a lot of people kind of claiming to use it, claiming to do things with it. And I take one look at what they're doing and I can quickly see that they really don't understand what they're talking about. But yeah, highly recommend invest and trade. Who do I recommend it for? Pretty much everyone that's super interested in learning about trading from a technical analysis point of view, from a um, order flow perspective. I think it's a good value. I've seen other like courses online from like actual funds and stuff like that that do training, and it can be 5, 6 plus $1,000. So it can be extremely expensive for real education. There's not a ton going on here. And by the way, I'm literally just sharing that because I'm a member in there and I trade and share to help other people in there, but I have literally nothing to gain from that. Like I don't get paid from Investor Trade or Carmine in any way right now. And so I'm just sharing free information to help people because this is what I'm doing anyway with my time full time. So do I watch candlesticks? Yeah, I went over, if you're here this morning, I went over a whole bunch of technical analysis just using price action and candlesticks. I just don't really use price action and candlesticks for like entry confirmations on trades, if that makes sense. I know a lot of price action traders specifically look for candle chart patterns to get entries on and stuff like that. That's not really what I do. I'll use it for just more larger time frame technical analysis, come up with key pivotal areas, key support and resistance areas, key supply and demand areas, and then I'll analyze price action and order flow around that. But I'm not using candle charts pretty much ever. I'm never using candle charts to look for like entries on trades, if that makes sense. Just more higher time frame technical analysis, coming up with where areas to look, where that you can clearly see is key pivotal areas, key support and resistance areas, because I view the market from an auction perspective. Where are buyers and sellers? I can quickly and easily see that on a candle chart. But then specifically for my trade entries, for managing my trades, for my trade targets, I'm looking at the order flow because that's the most real-time information that I can have. And that's how I get very good risk to reward entries before you see those things turn into patterns on a candle chart. Matt, do you only share your thoughts in the Academy chat? I never see your stuff in the other sections of Invested Trade unless I'm just blind. No, I don't often share stuff in the main chat of the whole Invested Trade. I'm primarily just in the Academy group. It's a much smaller, focused group of people that are really serious traders. And so I like conversing with people in there. There's a lot of people that have pretty close relationships because they've been in there for a few years now, a couple years now, or a year or two now. And it's a smaller group and serious traders. And the big thing is sometimes I will post when I think about it, I will post my pre-market plans in the regular main chat, but it's just too much like for me to manage trying to chat in two different chats. I just can't. I'm focused on trading, you know what I mean? So that's just kind of a side thing. And I don't have the time or mental capacity to try to share in two different main chats. But I do get asked often, and I will try to post more like my plans and recaps and stuff in the main chat, where I can just the non-academy main chat, where I can just copy and paste it into there. But for all of my real-time commentary and information, that's just typically in the academy main chat, just because I don't have the capacity to chat in two different groups at the same time. And if I have to pick one, I'm going to go in the academy chat because it's just a smaller, more focused group. How do I stop choppy day before it develops? Logan asked. A lot of it was just looking at the analysis that we went through this morning. If you go back and watch this live stream later, I'll post it. But it was just a lot of one, fundamental analysis, like the market is waiting on some key pieces of information, some news and things to come out that I talked about. Two, we're kind of sandwiched in between support and resistance areas. Three, yesterday was already a consolidation day. We broke the highs and lows overnight, and now we're back in the middle. So there's a lot of pieces of context that I identified before. So I don't know. I never know what's going to happen, but I was specifically watching out for exactly what we're seeing right now, is just the market is kind of sandwiched and stuck between a rock and a hard place. And so I just kind of expected it to be choppy, lower volume. People are sitting out until there's more clarity in the market right now. So I just took an edge. So how do I know before? I never know anything for sure. I just suspect that there is a higher probability that we're just going to be in a choppy, tight spot here. I have no idea how to get in the Academy chat. We the people, if you're in the Academy group, you should have access to the Discord, and there's a chat section in the Discord that's different. If you can't access that, then DM me on Instagram or DM Carmine. I'm sure he will help you and make sure you have access to that. But just make sure you're in the actual Accelerator Academy group on Invest to Trade, and that you have to do like an application for that and stuff. So it's not just the same as like the course that used to be able to just buy. That was a couple $100. And also, I think Carmine has that disabled right now for new signups. Let's see, what else did I miss? Too poor for the yearly cost as a new trader. Yeah, it's tough because like I get it, but at the same time, like you can't expect to like make a bunch of money trading without really learning stuff well first. It's almost like expecting to become an engineer without paying like $40,000, $100,000 to go to engineering school first. I say that because I was an engineer and I went to school for computer science. I guess a tech engineer, I should say, not like a electrical engineer or something. So very aware of spending $100,000+. Luckily, I had the military GI Bill that paid for most everything, but if not, it would have been extremely expensive, and that's what you have to. It's kind of the thing. I mean, there's a ton that you can learn for free though to get started. I'm not telling you to go spend money. I'm just saying like the advantage of spending money for a very clear and concise course is you're just filtering out a ton of noise. Like there's a ton of stuff you can learn for free online. The problem is it's not organized in a very good fashion that can help you learn in a quick way. And it's a bit all over the place. So the advantage of paying for something where someone is spending their time and resources to put together a really good training is you have a clearly laid out syllabus, I guess you could say, and of what to learn specific to a style of trading, and that can save you thousands of hours and probably years of like learning and trialing and erroring different things all over the internet. When I do my pre-market plan, do I pay attention to every psych level to take trades off? Not necessarily every level, but just key pivotal things, especially when I see price action reacting around it. Circle app for the Academy, yes. There is a Circle app where all of the training videos and stuff are in there. And there's also like live webinars every week. There's a lot more than just that. How much capital did I started? When I started out with futures, I literally just started with like a $2,000 account, and I was trading just 1 or 2 micro contracts for years. And I blew that a couple times. But I pretty much would reset with just like a $2,000 account, just trading like 1 micro contract, and while I was learning for a couple of years. Yeah, I'm not hard for me to short without testing those highs. I'm not really looking to short this here. Not really looking for anything right here. Yeah, Carmine shares a lot of good stuff on YouTube for free as well, Sebastian said, and that's true. If you are just dabbling in the idea of it, there's a good little free order flow course he posted on there, or series, I guess you could say. I'll be coming out with some more stuff too for you guys, longer format training and stuff. I took a long off 6K level because you were waiting for the pre-market low to be taken. Yeah, so what got me in that is like I was just watching that 6K level, but I saw interesting things on the order flow that got me in that there instead of waiting for the pre-market lows. And if I would have got stopped out for 2 points, then I would have been looking at those pre-market lows to see if it reacted there. Learning as much as I can from the A to Z course and recaps. Yeah. Rock on, man. Totally get it. And you're doing the right thing with what you can do right now. See the Academy chat and the website, but not the Discord. You mean the Circle app? Yeah, if you're in Academy and you don't have the Academy group on the Discord, maybe that's all you see. I don't know. What is your We the People? What is your username on there? Let me look. Coach Ted. Wait, I think I've seen you in there. Yeah, you're in. That is the Invest to Trade Academy main chat. Yeah, we've talked. I just didn't know your We the People name on here. Yeah, you maybe he made it so new Invest to Trade members, Academy members only see that. You don't see the old main chat. There's like thousands and thousands of people in the old main chat. Coach, you're already in there, bro. You should see I always post commentary throughout the day on there and my pre-market plans on there. And when I'm taking trades and stuff. Yeah. Bro's got me confused. Still just consolidating at these highs. On a micro level, this is kind of the same structure that we've seen on the higher time frame, just a kind of upward moving channel where we peak the highs, drop back down, peak the highs, drop back down, but we're still holding higher lows. So like just looking at the order flow here on a micro structure intraday in the first hour this morning, it's kind of the same structure we've seen on the higher time frame. All right, guys, if you appreciate me doing this, I'm literally doing this for free. I got nothing to gain from this. Please just drop a like, share my stuff on YouTube and Instagram. That really helps me out, reach more people, and I appreciate you guys doing that. It lets me know this is valuable for people and to continue doing it. Where can you please check me to? A1. Are you in the Discord? Are you yeah, I see you. Laksh, you're in there. You're in the Academy main chat. The main hangout chat in Discord. You would really like to dig into Bookmap, okay? Center the Bookmap chart. My default setting seems to be very right leaning. Yeah, so if in the bottom corner of the screen you see this little button here, I can click and drag it around, but if I click that, it's going to automatically move, but it doesn't always keep exactly centered. So it usually keeps price, like I can over here and then adjust it. It keeps it towards the right side of the screen. I don't know how else to adjust it other than how it automatically adjusts it there. But you can zoom in and out here, which scrolling in and out on like the main will adjust the time intervals here, left and then if you hover over the price on the right side here, you can squish and open that. I change this throughout the day all the time, but I generally open this up and down enough to where I can see these horizontal bars between price, and it helps me see better on this right side. Time intervals here, I usually zoom in and out throughout the day. I usually look at it between, I'd say 90% of the time I'm looking at around the 5-minute spacing, or like this, like around the 2-minute spacing. But it really just depends on the volatility in the day. I'm constantly changing and looking just at a view of the price and volume at different time. But more often than not, when I'm actually looking for an entry on a trade, I'm looking at it about the 2-minute, about like this, 2-minute intervals and spacing up and down enough to where, not like totally out like this, that's like hard to see, but enough to where I can see horizontal bars. I also don't want it like squished so I can't really see the price up and down. I like it opened up enough to where I can see these bars, and I'll 5 or 2-minute intervals, like about like this. We are continuing to grind higher. We held that 60-15 level this morning and just grinding higher, I would describe it as. This is valuable. I'm sharing already with people. Thanks, I appreciate that, Hungry Hunter. Can we go through a trade you may have taken and walk through Bookmap, i.e. what you saw for confirmation? Are you, Coach Ted, are you following me on Instagram? I do that a lot on Instagram, on all my trade recaps, and I show like usually like exactly what I saw on Bookmap. But I can make a video going over it with like actually like screen recording share, so it's better quality if that's interesting, and just looking specifically at Bookmap. and yeah, just deeper dive into specifically what I was watching for the trade. I can't do it right now because I'm watching this live and I want to keep recording the data. I'd have to pull up the replay data from a prior day and pull up my trade information to go over it. But I could make a recap like that. That's a good idea. It's just hard. So it's hard to do that for like Instagram because the Instagram video format is like up and down vertical. And so I'd probably have to make like a 5 or 10 minute like YouTube video diving into it. Would that be interesting? Okay. Yeah, maybe I could clip some reels of it to share on Instagram, but to like actually like share my screen like that, like I'm doing here, I have to make like a small YouTube video going over the trade recap that way. Is anybody else interested in that kind of thing? Okay. So ever since this last dip here, well, really all the dips, we had a lot of selling this morning and just kept making higher lows, higher lows, higher lows, and now just steady grind up. But like I said earlier, the risk reward here based on what I would be targeting, message retracted, we the people. I don't know why it's doing that. I don't know if you did that or if it's automatically doing that. I haven't changed any of the default settings for restrictions. So maybe if you drop any curse words in the chat, maybe it's automatically blocking that. I don't know. I didn't set that. It's just whatever the YouTube default settings are. Oh, you did it to rewrite it. Okay. My biggest question is understanding what you use for confirmations on Bookmap. I just look for things like speed of the tape, absorption, and combined with other information like key levels, supply and demand, and everything. But a big thing is like you can really get a feel for the speed of the tape as orders are coming in when you see start absorption and your reversal started to come out. And a lot of that just comes with screen time and experience. I've literally spent thousands of hours over the years watching Bookmap all day, every day. So I just have a really good, like almost spider sense gut feel of watching the order flow and price action on there. And there's nothing that can replace it, but I can try to show you like quantifiably things that I would look for. But a lot of it is just feel for the size and speed of orders as they come in up and down. Yeah, so for a long, like I would like to see a lot of large selling fail to break below a level, and like a bottom reversal I'm talking about. I would like to see like a lot of large selling come in with large red bubbles under a key level, fail to break down, and then I would see the tape speed up as buyers come in and then slow down as weaker sellers come in, type of thing. Same kind of stuff you can see on time and sales. It's just visually represented really well on Bookmap. How much do I pay for Bookmap? Man, I should have switched to the lifetime subscription years ago, but I'm still on the dang, like I pay like $100 a month. And I think it was like, I don't know how much it is now, but I think when I got it, it was like $1,000 for the lifetime. And I've easily spent several $1,000s now over the years paying $100 a month. Maybe the next time I have a nice winning trade, I'll just dump that into a lifetime Bookmap subscription so I can stop paying $100 a month. Still seeing a lot of buying up here. It's just if I were in a long up here, if I were looking to long up here, I would only be looking to target 60-30 to maybe 60-40, the overnight highs. And where would I put my risk without like getting a nice pullback entry? Don't know. Like really to be invalid, I would have to see a break below this 60-15 key area down here. We did get that hold above that 60-15, 60-16 that I've been talking about since this morning. At the time, we were just chopping up and down. Yes, we were holding it, but it just didn't look good for a trade, to be honest. We were seeing this buying fail at the highs, selling fail at the lows, and it just didn't look great for a trade. But it did work, and we are grinding higher. So right off that 60-15, 60-16, like I mentioned, one of my setups this morning was if we saw nice momentum and volatility and we saw buying hold above that 60-15 to take it long and target those 60-30s. Because down here, that would have been like, you know, a 14, 15 point target for like a 3-point risk. Great trade, right? 5R. Up here, we just didn't really see great things to take it long. You can clearly see the absorption that happened down here, but it just wasn't enough. And we're right in the middle of that range and just didn't see enough good information to take it long. And then we're just kind of steadily grinding higher. At any point, this feels like some selling come in and sweep this back down. And my risk reward again would just be 1-to-1 for what I'd be targeting. I guess technically you could speculate that we're going to go break out of the top of this channel now, but it doesn't. Volatility and momentum doesn't look good enough for that. Why do you think more people don't use order flow? I used to use purely price action, but order flow just makes way more sense. I feel like you are exposed to order flow, you have no choice. Yeah, I agree. Like once you really start learning order flow and seeing things, you just can't go back, in my opinion. But for one, like you can't really use order flow on Forex because there's no centralized exchange. And really it's best on like things that trade with like fixed contract sizes like futures. It's harder to do with like regular things, but I do use it like even back when I traded options on stocks. I would use like time and sales and look at the speed of the tape on time and sales coming in and out of key levels and stuff like that. So that is still looking at order flow, the size and speed of the tape on the time and sales. But yeah, once you are in order flow and really understanding, I would say it's not as easy and simple. And a lot of people that sell information online, quick and easy sells. Hard and long is hard to sell. If I'm saying like I have a great way to trade, but it's really hard, it takes a long time to learn, and it's expensive because you have to buy all these different tools, bookmap, footprint, time and sales, etc. And it takes years to really get a good feel for it and a good amount of experience, but it is a masterful way to trade. And it's really how most, at least short-term traders that I know of, like that work on like Wall Street and stuff, I know a lot of people that use that. And I don't know really anybody that would use just like price action as like a short-term intraday trader, but maybe. But what I'm saying is it's much easier to sell information that is marketed as easy and fast. And it's much harder to sell and market information that is honest, that says this is going to be really hard, it's going to take a long time to learn, but it has very high potential. So you probably don't see as much of it because of that, although it is becoming more of a buzzword now because I think mainly a lot of big things like Words of Wisdom has done a lot of interviews with guests now that are talking about how they used order flow and stuff like that. So it's becoming a little bit more of a trend. People talk about it a bit more now. So the long answer to your question is, why do you think more people don't use it? Because it's more complicated. It takes more time to learn, and people that are marketing stuff online, it's harder to say that it's easy and fast to learn. And so, yeah, Chart Fanatics has been posting some great stuff. My bubble settings on Bookmap are pretty much all default. Really, the only thing that I've adjusted is like the heat map color thing up here and the dimming that you can see right here. And then my volume dot size and contrast, you can see where I have that dragged here. That's really the only things that I've really adjusted. I'm not sharing my screen anymore. All right. Let me reshare it. You guys see me? Let me reshare it. I was still seeing it being shared on my end, but it looks like, again, after an hour or so, it stopped sharing. All right, reshared. Can you guys see Bookmap again now? Okay. Yeah, it seems like for whatever reason on these YouTube live streams, after like an hour, hour and a half, it stops sharing my screen. I have to reshare it. But yeah, just looking here, guys. This is what I was talking about. Somebody asked about my bubble set. It's pretty much all default. I'm not really changing anything in the backend set, but the volume dot, you can see where I have it dragged here. The what is this? I think that's like the contrast hue. You can see where I have it, and then you can see my color selection there, and then the heat map dimming here. I like to see blacked out high contrast for only these key areas. You can see if I adjust this, that's just so much noise, like visual noise. I just can't make anything out of it. I like to have this all the way blacked out. I only want to see like key large heat map borders. Is it back on? Stopped sharing my screen again? Hungry Hunter said he can't see my screen. Good now? Okay. I do not have I have OBS, but I'm not using it. I'm just live streaming straight from the YouTube app or YouTube web page. Maybe this week is a good time to start using it, since I'm doing this every day this week. I will probably start using that. I've only used it to like record a few clips and things like that, and not actually live stream from. So I need to learn. Maybe I'll watch a video this afternoon on how to actually use that to live stream from, because I've heard multiple people tell me that it's much better than just live streaming straight from the YouTube website. How many points do you say you net on an average month? Like based on my full position size, like just 1 point, like whether I'm trading 2 contracts or 4 contracts. I don't know, like anywhere from 50 to 200, I would say probably is the average range. I use Sierra charts for the footprint. The data, I have the Denali data feed through Sierra chart. On Bookmap, I have the rhythmic data that I pay for on there separately. And I don't think I have to pay for any data on Thinkorswim. It's just included. Biggest profit month so far. I don't really like talking about profit months. I know it's flashy and it sells online, and I don't really share that, because I don't really want to put people's focus on that because it really doesn't matter. Like you have a system, if it's profitable, it could be $10,000 or $100,000 a month, and it's just a matter of risk reward ratios. The only reason I share P&L on my trade recaps online is just to illustrate the risk and reward ratios of trades that I'm trading, and because it gets more attention and more reach. Like if I was doing recaps and just saying, 3R versus 1R risk, and people, it just doesn't communicate as well, I think. But saying I risked $300 and made $1,400 on the setup, then that communicates well. Also, like, it's also hard for me mentally to share like P&L and everything, because it puts me in the mindset of like wanting to like beat that. Like if I show you guys like how much I made this month, in the back of my head, in the next month, I'm going to just be telling myself, I got to beat that number or meet that number. And I'm going to have this pressure on myself because I want to share like my P&L. And that's not where I want my focus to be. I don't even look at my P&L throughout the days. Like I literally have it hidden. I don't even know my P&L. Well, I know I have an idea because I have a hard loss limit set. And obviously I know based on the trades that I've taken where I cap my risk, but when I'm in trades and during the trading day, I don't even have P&L on my screen at all. No, my points was based on like, if I had 4 contracts and the price moved in 10 points in my favor, then that was 10 points. So the accelerator is the Invest to Trade Academy. I'm not sure like what Carmine's calling it right now, but it includes a lot more stuff, more in-depth training video series specifically from Carmine and Dylan on their specific trading systems and exactly what they look for, and more details specifically around their tradings, and weekly live webinars that they do, and I would say just more information throughout the days, specifically from Carmine and Dylan, just insights from just professional traders. Dylan shares a lot of stuff from his analysis, like just working at not a hedge fund, but working at a prop firm on Wall Street. And so they share like a lot of, I would say, more professional kind of insider type trading information. And they do weekly training webinars, and they have more in-depth video series in the training. And then there's a separate smaller group chat where there's a lot more direct involvement from Carmine and Dylan and stuff like that. Sent you a PM on Discord for an easy setup video with YouTube and OBS. Check it out. Thank you, Jason. I will check that out this afternoon. Appreciate that. All right, here we go. Now we're breaking out to the upside a bit, accelerating a little bit more speed. Just watching it though, because again, like I don't have an entry from these lows, and from a risk reward perspective, there's just not much up here. Let me refresh my news feeds and see what's going on. Just announced. U.S. talks held market action. I don't really see anything significant. Chat GPT is down 40 minutes ago. Now, just a nice pump up here. There's some news that the US and India trade talks is going well. Nothing hard, though, that I see like confirmed, like any agreements made or anything, just like general statement, trade talks are going well. What news feed do I do? I'll drop it in the chat, but just a Twitter X page called First Squawk. I like it. It's just a quick little aggregated news source that posts like real time throughout the day, things important to the market. So this is a sweep over, yeah, oops, got my charts here. Yesterday's regular trading hours highs was around 60.27. So on this pump, we just swept above yesterday's regular trading hours highs. So let's watch this. If this sustains, then we may want to go take out the overnight highs in the 60/40s in that trend line. But like I've been saying, I don't really want to initiate longs up here at the highs when we've consistently rejected. Oh yeah, financial juice is good too. I know of that one as well, Mason. Typically, I'll be honest with you guys, when there's no setups and it's approaching like 11, is typically when I call it a day. I give it the full morning session till like around 11, and then I'll set alerts at some key levels and go enjoy my day. The market's going to just give me a holiday today, basically. It sucks because I want to trade. I want to share setups with you guys. I want to make money. But just not happening. I do not normally trade the pre-market. If I see something really good where I can kind of position myself for like a longer day trade, then maybe. But I would say over the course of my career, the last 3-4 years of day trading, I would say 90% of the time I regret getting in an entry before the market opens in the pre-market. Just because that's not the primary time frame that I have setups around, and I'm looking for setups during the regular trading hours. Now, if I was doing analysis and coming in specifically looking to trade like between like 5 a.m. and call it 9 a.m., which I have years ago, then yes. And you could find stuff around that, especially when there's some news volatility around 8:30. But that's usually the time that I'm just kind of looking to do analysis and early in the morning, and then I go run, and then I come back, and I'm mainly looking to trade after the New York session starts, the cash 9:30 a.m. start. Baja News app is good too. I've never heard of that one. Yeah, there's a few good ones. A few good ones. Also, another important thing that I've kept up frequently this year, just because of how touchy the market is to Trump anytime he speaks, is typically the first place to see it is he posts on his own thing, Truth. So I have an account on there, and I'll literally just pull up his Truth page, and I have a tab refresher. So I have a news screen where one of my screens is just the feed news feed. And I'm not like watching it. I'm just like, if I see a sporadic price movement or something, I'll glance at it to see if a headline came out or something. Um, I'm not like trading off the news. I'm just aware of it when things come out. If a sudden crazy move happens and it's into a supply or demand area, and I was like potentially looking for a setup, but I see it was because some crazy news just came out, then I'll probably just be like, whoa, pause. You know what I mean? If I think the market should be doing something based on technicals and everything, and it's doing the opposite, I may need to reassess my analysis and see if some news came out that is just blowing through technicals. Because if some news comes out that spooks the market or whatever, you can pretty much throw technicals out the window, because it's just going to do what it's going to do until the panic, FUD, fear, uncertainty, doubt, whatever, or hope has subsided a bit. So I never want to just fade really a strong momentum thing that occurs because of a major change in like fundamentals or news. Hopefully you guys are getting something out of this. Pretty dull day. I mean, really, we've traded in like a 10-point range, a little bit more than that, but from the lows at 65th, 6016-ish to the very highs now on that pump 6030, so like 14 points in the first hour and a half is pretty dead, pretty muted. And there's really nothing worth initiating up here. I don't want, like I said, from a higher time frame analysis, we do continue to make higher lows and we're pushing higher inside this channel. But every time we poke the highs, we reject. So I'm not really looking to long or short this up here. I'm just sitting out. So I don't really like initiating anything up here, just from a technical analysis perspective, unless I saw really amazing confirmations like on order flow to take a scalp. Yeah, don't do that. Price act. I don't know how to say your name, Duenas. Price action like this makes you want to size up. Don't do that. Always keep your size and risk consistent, at least on like a weekly or monthly basis. Don't size up. Yeah, it's frustrating because it's just like grinding and you want to like size up and just catch like a couple points, but usually that goes against you, and then you want to size up even more and then it goes against you again, and it's just like up and down and it's just nothing good to trade. How do I feel about pyramid into winning trades? I sometimes do add to winning trades. That is in part of my system. If I see especially a good momentum trade, a trending direction, and I see an opportunity to add to a position, ideally if it's still relatively close to my entry and I can trail my risk to a point where I'm not adding any risk to the trade, but I'm potentially adding a lot more profit to the trade by sizing up. But I usually only do that once, and ideally it's relatively close to my first entry, but after getting better confirmations in a trending direction. But I never add to a losing trade. Never. But I would say probably 75 or 90% of the time, I'm just taking one entry and then I'll usually take one or two exits. Depending on the conditions, I'll either just take one full exit, or a lot of times I'll take a first exit for like 2, 3, or 4R multiple at that target. And then I'll hold the second half of my position for like a 5, 6, 7R target, depending on the conditions, and I'll trail my stop. Hey, Matt, wanted to thank you for taking the time to answer questions from an old floor trader trying to transition to the screens. I am done for the day and no real volatility to capitalize on. Yep, it's definitely a good time to walk away. Peace. Honestly, I probably would have already been done if I wasn't doing this live stream for you guys. Like I said, if it's pretty dead like this at like the best volatile time of the day, typically where I like to trade first hour, hour and a half, coming into like 11 a.m. It's coming to a time where I'll set alerts and walk away. I'll leave my screens up and stuff just so I can check on it throughout the day. But I'll set alerts where I'll get those alerts on my phone if they trigger, and just go. I kind of clean my garage. I got my boat pulled out yesterday, so kind of need to clean out my garage and do some other things. So probably do that. You're the man, dude. If you do this every day, I would like to be here. Yeah, every day this week, guys. So I always have, or over the last few months, I've been doing this once a week, and I probably will continue that cadence, or maybe twice a week. but a lot of people have wanted me to do it every day, and I just thought it would be beneficial for me to quickly gain more experience doing it, just to do it every day for a week. So I kind of had lower expectations as far as like I'm not sizing up on my trades. I'm keeping my size like consistent and small this week, so it's not too much of a distraction to manage both the live stream and this. And while I gain the skill of kind of, because I have to focus on the markets and I have to focus on talking to you guys, which I haven't had. Whoa, a lot of selling coming in here. Hang on a sec. We tested that 60-30s key level and we're dropping fast. Let's see if some news just came in. US stocks are currently in a state of uncertainty as investors anticipate the outcomings of ongoing US trade talks. So this just got posted by First Squawk. Haven't I been telling you guys that since like 9 a.m. this morning when I started the stream? Like, yeah, no shit. You can say that now that the market has traded sideways, but we already knew that was a possibility since 9 a.m. this morning going through analysis. The market's been trading sideways for the first hour and a half. News posts, the market is sideways. Yeah, no shit. But based on analysis and everything that we've seen, we kind of expected this already before it occurred. Yeah. Yeah, we knew that we're kind of, from a technical perspective, we're kind of between a couple key areas. So the market is kind of sandwiched in, like I said, between a rock and a hard place. And then from a fundamental perspective, there's ongoing trade talks with US and China right now, waiting for the outcome of that. We have CPI and PPI coming out the next 2 days. Market's waiting for information on that. We have Trump speaking today at 4 p.m. Market's waiting for information from that. So there's a lot of reasons to be cash right now and wait for higher quality opportunities to present themselves. All right, so we got that quick bout of selling and then nothing else after so far. It's almost 11 a.m., so I'm probably going to get ready to wrap it up soon. Do I risk by dollar amount or percentage? Both. I usually always like to have my trading risk per trade to be less than 5% of the account that I'm trading. But I'm at a point where that's not as crucial now. I'm mostly concerned like on a monthly basis of keeping my risk consistent and then adjusting if I have a good month or a bad month. And that's something that I learned from Dylan in Investor Trade, and I like it, so I do it. So I try to keep my risk pretty consistent at or below like $500 or $600 per trade of risk, which is typically based on the setup between like 2 to 4 mini ES contracts. And I may size up a little bit. Maybe next month I'll go up to like 3 to 5 contracts, and maybe I'll go up to like $700-800 risk per trade. But one thing that I will say I'm not very good about is increasing my size fast enough when I do have a small risk. So a lot of times, a lot of my trades you've seen recently, I've only risked like $200 or $300 because I got in like 2 contracts, and I should have been in like 4 contracts. So my allowed risk per trade for myself right now is like $500 or $600 per trade. But a lot of times I risk less than that, which is frustrating because instead of making, $1,300-1,400 on a trade, I should have made like, $2,600-2,800 on that trade, but I didn't get in my full size because I usually have my order size set to 2 contracts, and maybe the entry happened fast and I either didn't click 2 entries or whatever. And so then I was only in with $200 or $300 worth of risk, and I should have been with $500 or $600 of risk. And then when I have a winning trade, it's $1,300 or $1,400 instead of $2,600 or $2,800. So that has been happening to me sometimes lately. So Maybe I'll go a little bit more in the middle and keep my standard size 3 and then try to adjust up or down based on the risk of the trade. I don't know. Yeah, I only trade my own personal cash account, no prop firms right now. All right. 11 a.m. Been on here for 2 hours, and the market is still within like a 10-point range since the open. Did anybody take any trades today or just watch? Shorted the pop at 29. That's not a bad setup. I didn't want to short pops because just higher time frame that the trend has been up. You know, I'm suspecting we could see a breakout of the highs eventually, but yeah, I mean, that was right into that kind of supply area, you could call it, where that large drop happened around 1 a.m. last night. So you could see that as a supply area right there around 29.30. I was wanting to more use that as a level to target with a long if I found a good entry for a long earlier around 60.15. I just didn't like the conditions and volatility and didn't see a good entry for it, but it did work. And that was a good target. And now it's maybe, depending on how this plays out, a good short entry, but I don't know. And just contextually, so I have like 9 or so like different trade setups that I look for. And then I look at the context and overall picture of where the market is, and I'm like, okay, these setups are best in uptrends, these setups are best in downtrends, and these setups are best in consolidation. So I really only want to be trading my best setups for the current market conditions. And even though other setups could work in different conditions, more often than not, if I do that, I'm going to have like a much lower win rate and much lower R multiple and stuff because I'm aligning setups to different conditions that aren't A plus. So I really right now am focused on reducing my frequency and really focusing on the A plus setups for the A plus conditions that they match with and take the best setups possible. Somebody asked earlier, like, what's my typical win rate? I've had profitable months where it's been as low as like 30, 35%. But I would say on average, I like to be around 50 to 60%. If I'm too far below 50, 60%, then I know I'm maybe taking too many trades and not really zeroing in on the best setups. And if there has been months where I've had a win rate as high as like 70, 75%, probably my best months as far as win rate. But they weren't necessarily even my most profitable months because I was almost too selective and took too few setups. So generally, based on the R multiple that I typically look for in setups and everything, I typically am around the 50 to 60% range. I would say a really great month for me is around a 60%, 60, maybe 65% win rate and an average R multiple of like 3 or 4. That's a great month in my opinion. All right, guys. Unfortunately, this has just been pretty dead. This is kind of what we expected. I was kind of communicating that since we started the stream this morning, just to be prepared that we could have a pretty dead price action this morning. We're right in the middle. There's not a lot of good A plus opportunities here, in my opinion. So probably going to wrap this up and let's wait for better opportunities later this week. I'm going to continue doing the live streams every day. We have more important news coming out. If I keep this up and I do see a setup come up that I do trade, I will update you guys on Instagram. I'll post a recap on there. But I'm not going to live stream all day till 4 p.m. just waiting for something that maybe will happen and probably will not because we've just not been having great volatility conditions in the morning yesterday and today. Unfortunately, had a great setup yesterday and got wicked out of it. It would have been, 10, 15 point winning trade and just got wicked out right before it went to the target. So break even yesterday, no trades today. Um, just how it goes sometimes. It's important to protect capital when good opportunity is not there. So everybody wants to see, the high dollar flashing trades and everything, but to be a good trader, this is what it looks like a lot of the time, is just sitting patient and waiting for good setups and taking the opportunity that's there and not forcing opportunity that's not there. That's what good trading looks like. And it's boring a lot of times. And you just have to be disciplined and patient. And you have to know what you're looking for and only trade that. That's part of your system. And if it's not, then be patient. Why not short at 60-30? We're just continuing to make higher highs and higher lows on look at every time frame from 15-minute, hour. We're consolidating right at the top of a channel that we've been in at a weekly time frame, weekly and daily. Typically, when you consolidate right at the higher time frame consolidation, that can lead to breakouts. So from a technical perspective, bulls are in control. We're making higher lows, we're making higher highs. Yes, it's been rejecting each higher high and pulling back, but it's not an A+ opportunity to short, in my opinion. So yeah, you can make money doing it. Yeah, you can scalp a short off the highs if it rejects, but I'm just not it's not what I want to put risk on for. And in fact, many times when I've tried to do that, I ended up taking 2-3 losses in a row trying to catch it. And shorts on that type of thing can get stop hunted multiple times before you eventually do get a pullback, and then you may or may not be even in that pullback. So anybody else have any questions, comments before we wrap up the stream for today? We'll be back again tomorrow, 9 a.m., same time all week. Going to do it again. And hopefully we have some good volatility and good setups come tomorrow. Do I have any good tips for a trailing position? Really, the biggest trailing that I do is I just move my risk to break even. Once I see structure and shift in my direction, depending on volatility and conditions, right now it's usually when I see like 5, 6, 7 points in my direction. And keep in mind, most of my setups I'm risking like 2 or 3 points on. So I'll usually trail my risk to break even at that point, just because I know from my data that I'm usually right once that occurs. And if it comes back to my entry, it's usually going to sweep lower, and maybe I'll look for a better entry. But to know that for trailing and stuff like that, you have to know your data and how you trade. So I highly recommend having something like TradeZella, where you can really track your performance and your data and understand your setups that you trade, and then build around that as far as what makes sense for you to where you trail your stop loss, or if you take partial profits along a move, where you close out of or trail your stop loss. So that's very personalized to how you trade, and there's no one right way. But I would say the most important thing is knowing your data and how to manage it. That makes sense for your trade setups. Could you accept my DM, please? Just want to ask you a few questions about, I'll look. I try to periodically check my requests, because I get so many requests every day for messages, and a lot of them is just spam. So sometimes legit people asking questions get lost in my request box and the amount of spam messages that I get, but I'll look for it. Mental capital drainage. Yeah. Preserve the physical and mental capital. This is starting to look like a good top here. There's a lot of absorption. There is a lot of absorption here under 60-30, and we're starting to see some better selling coming in now. So I was literally just about to walk away, but I am seeing a lot of good absorption here now around 60-30, 60-28. Looking at my footprint chart, I see 300 lots of absorption, 200 lots, 500 lots. So we're seeing a good amount of absorption up here actually. So maybe this is actually turning into a possible short setup up here. But really just given the overall context on the day, I don't love it. Yeah, I just don't love it. And I'm not wanting to force anything. All right, I'm going to wrap up the stream, guys. If I do end up catching a setup on it, I'm going to probably walk away and set alerts. But if I come back and see a good setup, alerts trigger, etc., then I will update with a trade recap on. So, sorry, news just came out 11 seconds ago. US and China have concluded trade talks in London. So that just came out. All right, drop a comment in the chat. Should we stick around for a few more minutes and see what develops here? Stick around for 15 or 30 minutes and see what develops here? Or should we call it a session? Stick around. All right, we'll give it 15 or 30 minutes here since this news just came out about concluding the trade talks in London. Let's see what develops. Give me 1 minute. I'll be right back. I'm going to refresh my eyes really quick. I'll be back in 1 minute. All right, guys, I'm back. Just needed a quick reset. Go look at the flowers outside. Let's see what develops here. Yes, I will stick to my gut. I'm not going to force anything. I'll give it a few more minutes since it's still the morning session. It's not quite lunch yet. This news about the U.S. and China trade talks has just come out. So we'll see what develops here. See if some volatility starts coming in. We start seeing a good setup. But I'm very ready to close it up and call it a day here in the next couple minutes. So the other thing to keep in mind, just because the US and China trade talks are officially concluded now, we may not actually hear anything come out of it. Both calls and puts value are increasing. Yeah, it's probably just because of the Greeks, because of the increased risk awaiting this news to come out, I would guess. So there's a lot of speculation on both sides, people playing lottos. So people playing lottos on basically this US China news to come out. And I'm wondering if we actually won't hear the results of that until Trump is set to speak at 4 p.m. today. I don't know, but we'll give it a few minutes to see if any headlines surface and we get some increased volatility. And not that I'm going to trade the news and just go with a spike in the price movement, but see if it accelerates price movement to a key area where a good opportunity sets up. What site do I use for the news? I shared it earlier if you scroll up in the chat, but I look at an X page called First Squawk. It's a good free news source that just aggregates and posts news throughout the day. Definitely seeing absorption of buyers here. Buying is definitely weaker. You can see on this pop here, look at all this large buying that got absorbed after we had this spike here into the 30s that got absorbed. Then we had this bounce here that got absorbed. Now we're seeing some weaker buying popping up here. So this could be interesting for a short setup. Contextually, I don't love shorting this area, to be honest with you guys. So I'm possibly okay if just watching it here. I don't know if I want to put risk on for it, especially because anything could happen. It's kind of 50-50 if any news surfaces right now around the conclusion of these trade talks. I liked this level better as a target for longs, but we just didn't get an opportunity to do that, or I didn't get an opportunity to do that based on how I trade. What's everybody else seeing? What's everybody trading? Let me know. Yeah, regular trading hours, volume profile is giving lackluster sideways and poor volatility. Yes, indeed. Just look, look at kind of any volume profile or volume bars under the candle chart. You can clearly see very lackluster volume and price action today. Even worse / smaller volatility than yesterday, which was already bad. Not bad, but it just is what it is. Nothing's good or bad. It's just, it is what it is. And you just got to find, it is what it is, and you got to find the opportunity based on how you trade. And if this is not good for how you trade, maybe for somebody else, this is great for how they trade. But for how I trade, this is not ideal. And so I'm not going to waste capital trying to trade less than ideal conditions for my setups. I trade ORB, break and retest. 6024 is top level. So what are you looking for on a ORB break and retest, Joseph? Are you just looking for a drop back into that opening range to see if it's supported by buyers? I'm curious because I don't really, I do look at the opening range, especially if it forms like a base and demand or base and supply area, and then retest into it. But I don't have I wouldn't say I have a specific setup that I call ORB. I know some people do, that they have like a very specific time window that they look for to hold a bounce off of whatever, blah, blah, blah. I don't have that. So I'm curious if you do and you're looking for it here, what are you looking for? 5-minute chart candle closes. Use as confirmation. Interesting. I don't know what that means as far as what you're looking for a setup. Are you looking at the 5-minute chart here? Pretty wicky, choppy open. When we broke out of that, I see a nice bit of buying volume right after 10 a.m., around 10 a.m. Up. Okay, so I see like around 23, 24. So you're looking for a drop into that to hold, which we kind of just did. So did you take a long off 60.23, 60.24? And if so, where did you put your risk? Maybe below 60.21? Okay, makes sense. I didn't really see much to take that as far as a trade on the order flow based on how I trade, but it is interesting. It bounced right there. So some people are watching that and buying it. What I'm watching for, dang, got stopped to the tick. That's annoying. What I'm just watching out for here is there's a lot of buying at these highs, which is right where all this selling initiated a large drop overnight, which we can see. You want me to switch over to my candle charts or just leave it on Bookmap? But if you just look at a candle chart, you can see right around 1:10 a.m., pretty large drop and sell-off after we broke back under that upper channel trend line. I wanted to use that area as more of a target for longs if I saw a good demand area hold. But now we're coming back into that, and I'm seeing a lot of aggressive buying on the order flow. And here is that aggressive buying. Here is that aggressive buying. And it's not really driving price any higher above that. So let's mark this. Basically all in here. See all this aggressive buying up into here, right at that kind of, we could call it supply level where market sold off last night, breaking back inside that channel. And now we see all of this buying back into here again, absorbed. And I'm seeing that on the footprint as well. 300 lots, 200 lots, 200 lots orders. And we're rejecting again. Now we retested this again with smaller buying. This probably would have been the ideal entry right here on the smaller buying pop right in here around 28. Put a stop over 30. Given that we did consolidate so much on the open, I guess we could target a sweep under that. We could target like 60.15. So basically the reverse of the setup that I was looking for this morning, which was buying off 60.15, target 30. Now we failed at 30. It would basically just be a retracement of that move since there's been such little momentum from buyers, and just target 60.15, 60.16. Oh my goodness. So now a news thing just came out that actually the US-China talks are still ongoing. They have actually not concluded. So yeah, now the news is coming out saying, no, the trade talks have not concluded. So I don't know who that idiot is that put that out initially, that the talks have concluded. But per a U.S. official, the U.S.-China talks are still ongoing. So false alarm. Man. Fake news. Yeah, I'm still seeing this area resist here, guys. And we might drop from here, but I can't say that I love it overall enough to put risk on it. Like the short with the set 60.30 to wait for a break of structure. Got in on the top of the candle at 60.27. Stop at the high, targeting the low. Yeah, that's a valid setup. That's what I basically just said would have been ideal for that. If you're speculating that this absorption holds and strong selling comes in, ideal entry probably here around 60.27s with a stop over 30s, 60.27, 28. Great entry, and then stop over 30s. Just with overall how price action has gone today and the higher time frame market structure and yada yada, all that stuff, it just doesn't feel A plus to me. It's like a B plus setup. And this month I'm really trying to focus on no B setups, like just really focus on A plus setups. A little bit of activity sparking here. I guess what's making it less of a good setup is just how low the volatility is, how slow and grindy it is, the overall location in the market, all of that combined, just not great setup, not great conditions to put on risk. And I would say, like, I could easily see us going up here again, sweeping these highs again, and then rejecting lower. But there is some selling coming in. We clearly see this absorption up here. Certainly is a valid setup, in my opinion, for how I trade. It is a valid setup. Also, just time of day, it's like 11:30 now, so we're coming up on lunch hour too, where maybe today we see something crazy happen then. But typically you have better volatility, and then it will kind of slow down early in the afternoon as less and less people are trading, and then it'll kind of pick up later in the afternoon again. That's kind of like a typical daily cycle. All right, guys. So since that news was fake and we're still just consolidating sideways, there's really nothing crazy going on. I think I'm going to wrap it up here now. Tried to hang on there for a minute. This might drop out of this range now off that level. And like I said, this is a cool setup, but it's not what I want to trade right now. So I think I'm going to tap out and set some alerts and look for a trade when we get some new information in the market, new volatility, new price action, new range. Not really viewing this as A plus. It's like an inside day of an inside day. So I'd rather just wait and see for better A plus setups. Mike's punching out. Mike drop. Thanks for being in here today, everybody. Really appreciate you all joining. Like and share if you found it helpful. Again, we'll be back again tomorrow, 9 a.m. So hope to see you guys all there again. And with that, I'm going to close this up. Peace out. Thank you guys for joining. Appreciate it. Thank you guys.